Crypto markets recover off the lows as the Fed pushes back on rate hikes and jobs data shows weakness. Puts get monetized on Bitcoin, but nerves remain around Ethereum as the ETF rulings get punted to July. And implied vols remain under pressure as realized spikes, but vol traders expect a period of calm. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. As usual, I've got my man Dave from FRNT here. Remember, if you like this content, like and subscribe to the channel, and you'll get to see this as soon as it comes out. All right, Dave, these markets don't seem to want to hold the bounce.
Feels that way a little bit, although it feels to me we're still very kind of range bound. Obviously, we had that kind of dip last week. Was it after we spoke last week?
Yeah, like when we were
60K?
last time we spoke, put skew was going bid. We were testing 60K, and I was like, "This looks like we're going to break."
Yeah, and it wanted that little flush, and it got the flush. And then it feels like the Fed kind of came to our rescue, and actually last week for me was a really big week on the macro, and we'll get into this, but it was, I think, quite a significant sort of week. That's going to shape how we start to trade throughout this quarter, and it won't surprise you. I think it's pretty bullish, but
shocker.
But I think there's a few things that happened last week that should improve liquidity throughout Q2, and as we say, we're functional rates and liquidity in this space, actually generally in risk, not just crypto, and I think we're going to see an improving liquidity outlook throughout Q2 that should allow us to start breaking those highs, and I think begin the next leg higher for Bitcoin towards the sort of 100K
I mean, it was
levels.
a pretty violent reversal, right, off those lows when Powell basically said hikes aren't coming, pretty much.
Yeah.
Right.
Yeah.
And then so to give us a bit more sort of color on that, so no hikes, but then the QT taper is pretty significant.
Yeah, it's significant, I think. So no hikes as we expected. Well, no cuts, are all unchanged. But we spoke about the market, in our view, or my view, certainly it moved too far in kind of pricing out the Fed. People started talking about hikes and pricing this like US reflation trade, which was kind of really driving yields higher and the dollar higher, and that's a huge headwind to Bitcoin. And it felt like that had run a bit too far. So the key things, firstly, Powell pretty much killed the idea that they're thinking about hiking, that they would hike. I think he said, there's paths to not cutting and there's paths to cutting, and it will depend on the data. But importantly, he did say there is no path right now to hiking. Right. He still sees rates as restrictive. So we've had to start kind of sort of pricing that out.
The jobs data confirmed that view as well, right?
The jobs data confirmed the view, and actually, I mean, just before we come in here today, jobless claims, just a bit of a bigger print on the jobless claims.
So funny how the markets are cheering bad jobs data.
I know. I mean, it's
bad news is good news.
Bad news is good news in a world that's
liquidity driven.
Yeah. And if it means that it leads to an easier rate environment, easier liquidity environment, risk assets tend to like that.
This is something I said to my subs this morning in my daily note. It was there's a chart of the City Economic Surprises Index rolling over, and the S&P doesn't care. I was like, because the market is not the economy, right?
Yeah.
And it's like in the reaction function we have of central banks is when there's weak data, it gives them an excuse to cut and stimulate effectively and add liquidity, and that's good for risk assets, right? So that's what the market's responding to.
Yeah, exactly. So so it was interesting. So the big things last week. So the really dovish element of the Fed was this QT taper. So we knew the taper was coming. We've been speaking about it for quite a bit, and the taper was bigger than anyone was expecting. So I think most people expected to go like from 60 billion a month in Treasury, which they're allowing 60 billion a month in Treasuries to roll off the balance sheet. So they've gone from 60 billion to 25 billion. So another way to think about that is if the taper is a tightening and they're essentially taking 60 billion of liquidity out of the market each month, now they're going to be taking 25 billion out, which essentially, relatively is like a 35 billion increase or improvement in liquidity. So they're going to be reinvesting like 35 billion basically that was previously being taken out of the market. So that was quite big, but it was particularly interesting in that it came on the same day before the Fed. So we had this like the QRA, the quarterly refinancing announcement, where the Treasury announced how they're going to fund themselves through the next quarter. Now, important things around that was, firstly, there was a slight increase versus their projections, around 41 billion that they're going to need to borrow for this quarter. But all the borrowing that they're going to do, they're going to increase Treasury issuance. So coupon or sort of bond issuance, so like 10 years, 30 years, is unchanged. So there's no increased issuance on that side. They're going to increase issuance at the front end, which we spoke about again in terms of that's a way of they can then easily draw out the money, the cash that's parked in the RRP with the Fed and money market funds. That's easy to finance. That money can sort of come into that market and fund that. They're not touching the back end of the curve. And then the other thing is that they've announced the schedule for the Treasury buybacks, which they're saying is to maintain Treasury market liquidity. I mean, by the way, we talk about Bitcoin. How worrying is it that we have the world's biggest, deepest, most liquid market needs some level of support? In a way, so they're going to be doing these buybacks from the end of May through July of like 2 billion a week, where they're basically buying back sort of what they call off the run sort of treasuries, which are a little bit more liquid, but essentially they're buying like 10-year type treasuries. They will offset that again by probably issuing at the front and issuing bills, but that combined with the fact that we've had a sharper taper. The kind of re-weighting of issuance to the front end, it looks and feels like and has very similar implications to yield curve control. So this looks to me like the Fed and the Treasury are going, we need to keep a lid on back end yields and we need to control this yield curve. So we saw what happened when Japan continued to do yield curve control effectively. That tends to, obviously, is going to cap out yields, but also it tends to sort of feed through to fiat currency weakness as well. So I think that's pretty huge for the market. We saw the initial reaction, and combined with the Fed of like yields sort of moving lower, dollar coming lower, Bitcoin actually had quite a sharp move higher back towards that 65k level.
Yeah.
We've kind of seen a bit of an unwind of those moves.
Something going on in China?
Yeah, so as always, I mean, so also what was quite interesting as well, the Fed come out and I thought was quite dovish and sharper taper, and then dollar yen got hit pretty sharply just after. So it almost, in my mind, had like a coordinated feel to it, and that we'll be a little bit more dovish, and then just when the market might be feeling a little bit weak, then the Ministry of Finance in Japan can come in and smash the market. We've started to reverse that move a little bit.
Yeah, dollar yen's back above 155 as we speak. Yeah, and
then that's putting pressure again on the Chinese yuan, and again, I still think whilst China's currency is under pressure, they're incentivized to kind of keep a lid on Bitcoin to maintain this veil of stability that I keep saying, to discourage the capital outflows. So I actually think this week we've kind of seen a bit of a reversal of the dollars, just kind of regained some of the ground that it lost last week. Yen's back under a little bit of pressure, not as much as it was, but back under pressure, and the Chinese currency is back under pressure as well, and I think that ends up keeping a lid on Bitcoin. So I think whilst that dynamic plays out, we're probably stuck in this, call it 60k, 65k range. It's going to be hard to break out of that short term. However, I do think this improved liquidity outlook should see us start to chip away at that 65k level, and then obviously onto the bigger levels into like the low 70s, and it's game on.
And it seems like we've become a bit more correlated to risk assets again, right?
Yeah.
There was a lot of decorrelation when it was all about the crypto story, all about the ETFs and the inflows.
Yeah.
But now we are kind of moving in lockstep with stocks, with equities, right?
Yeah.
So if equities do charge higher over coming months, then that's probably going to, over the summer, then that's probably going to help. And there's quite a lot of support in equity markets in the form of buybacks and things like that might drive us higher.
Yeah, and that's a great observation, and I think it ties in with like the conversation we had last week around the kind of crypto's lacking a narrative right now. You know, we had all the excitement around the ETFs and whatnot coming into this year. The ETH ETF is still kind of in the background, but that looks like, as you said in the opening here,
I was going to ask you about that.
That looks like it's been punted. So therefore, it's kind of reversed back to being a bit of a macro sort of risk on trade. And again, given that I'm pretty bullish risk, given this liquidity outlook, then I think Bitcoin should start to climb its way, if not accelerate, but climb its way back to the top side, and then sort of start hopefully taking some levels.
What do you make of them punting this ETF date into July? Is it a case of still think it's going to get done in July, or are they going to punt it again? Because the market didn't really react much. It didn't go down much. It didn't go up much on that decision to roll it. Right?
Well, I think the market already mentally had kind of killed the idea of May. I know there was some optionality priced in around that, because you probably just from a pure probability distribution, you probably need to have something in there for that. But I think the market was expecting May was a no-go in a way. So I think it was the Invesco Galaxy ETF, they've delayed until the 5th of July. And we spoke before we come on here, they can't delay one and then approve others, because then
essentially the same product, aren't they? So
So
what's the justification?
Yeah, you're handing them a huge advantage if you just approve, say, one or two.
Yeah, wouldn't you get sued if you did that?
Yeah, which is why I like coming into this year, like it was like the January was the deadline, because it was you're going to do all or none. You can't just approve a couple.
Yeah, once that precedent has been set with the Bitcoin one, you kind of know that's kind of how it has to play out in ETH as well, right? If they're going to do it.
So I don't know. I mean, when it gets approved, is it July? Is it later?
But I guess from a game theory perspective, like, why would they punt it to July if there's a high probability that they're just going to roll it again? Why wouldn't they just buy themselves 4 months instead of 2 months? Do you know what I mean?
Yeah. I mean, this is, I guess, how these things work, and why they think, right, okay, that'll be the next deadline, and then that gets rolled, and next deadline. But I'm still pretty confident it will come. And I guess every day that it's still alive and the possibilities are alive, you know, it kind of gives us all hope, and then you're going to have to keep sort of pricing it. And obviously we've got the ETFs in Hong Kong are alive and kicking, the ETH and the Bitcoin.
They did get some reasonable inflows in the end.
Yeah. It looks like it was like kind of
first
almost
week was
like
the data
seed,
wasn't there, right?
Yeah, like the seed capital for it. So again, we're not expecting them to be anything like what we've seen in the Bitcoin ETFs in the US. But again, like all positive stories. So yeah, let's see how that plays out. But again, we keep talking about it. It's not happening yet, but it does feel like ETH is like very unloved, and there is a potential story there that gives it a narrative that could see it explode.
I mean, the spread, the ETH Bitcoin cross continues to grind lower though, right? So,
yeah, it does. Yeah, and it's had little moments where it's perked up, and I mean, again, I think if I'm right on the liquidity side of things, then like the kind of liquidity play tends to be a move out of the risk curve, and you sort of move away from Bitcoin dominance towards the alts. So then like ETH, Solana, and then, you know, start to move down that. So I think that starts to play out throughout this quarter. We just got to start to see this liquidity start to flow, which it should do throughout the coming weeks and months. So sort of feel quite good about that. Probably want to own some ETH Vol. Again, this sort of relative trade against Bitcoin Vol, I still think looks attractive.
On that point, why don't we have a quick look at what I saw in crypto Vol this week? Okay, so jumping into Vol this week, obviously realized spiked quite a bit last week when we broke down below those key levels, as Bitcoin went below 60K and Ethereum broke well below 3,000. So I've got Ethereum realized here, saw a 6% drop and then a rebound, sharp rebound, 4%. But since then, you can see the moves have been somewhat smaller. So even though the 10-day realized is sitting up there in the 60s, If we go look at shorter dated realized metrics, they are rolling over, and that is also why we are seeing implied volatility come down as well. So looking at shorter dated implieds, we can see that we've got the curve slowly kind of moving back into contango. It still probably has some room to steepen if we really do go a bit sleepy and realize comes in. So you can see low 60s. We're in the sort of mid 50s now in that front end. That back end vol holding up slightly better. But, you can see a relatively flat curve here. So at the money 30 day versus, say, 60 day, that curve there is pretty flat. So would not be surprised to see some sort of bend in that curve continuing, where that 60-day maturity in the kind of July area holds up well, just because some of these SEC decisions on the Ethereum ETF have been punted from, they were supposed to be sort of in a week or two, they've been punted into the longer maturities. So I would expect to see more pressure on this front end part of the curve as we have more of a bid in those event buckets now, which are probably going to be in that 60 to 90 day region. Now, it may well be that the day gets punted yet again, but the chances are the vol market will assign some sort of event risk to those later maturities. And if the market does go quiet and realize does stay pretty low, then it's really that front end that is going to continue to come under pressure. So that's what we're seeing in term structure, and similar story between both Ethereum and Bitcoin, even though the ETF story now is only really about Ethereum. Looking at the flows, last week we did see on the breakdown, a lot of people had bought puts. We had been talking about put skew going quite well bid last week. Those puts were monetized to a large extent. So the 51k puts were a big ticket that got unwound. We also saw other unwinds in the kind of 60k, 62k kind of area. Call buying did come back as well. Some people were trying to play that bounce back. Obviously, we got some fairly dovish macro last week with what Powell was saying at the FOMC, like pushing back on rate hikes, and then also the non-farm payroll data coming in weaker and leading to yields selling off a bit, and that did provide a nice little boost and help Bitcoin get back above that 60k area. So we were seeing May to September calls being bought in this kind of 60k to 75k region. And rather than just buying a load of vol, we did see people selling back-end vol against some of these call purchases. So these big orange bars are September options, where people were selling the 90k and the 100k strikes as kind of funding legs to some of the shorter dated calls that they were buying. So those are the flows in Bitcoin. Ethereum flows a bit more mixed on the put side, not really just monetization of puts, people being a bit more wary of how low Ethereum could go if it broke down below that 3,000 level. Really, the main clips were these big calendar trades. The 17th of May, 24th of May is the calendar. So only a 1 week calendar where people were doing the 3,000 strikes, the 3,300 strikes in quite decent size. And this was basically people trying to position potentially for an ETF ruling to happen in that week. And they were buying that event bucket. But it looks like these things are getting punted out to July now. And so really that trade doesn't look like it's kind of got that much juice in it anymore. We haven't really seen anyone unwind it yet. But to be honest, these type of calendars, they're short gamma trades. So if the market does go range bound like it kind of is now, and it's kind of not really realizing that much, then these type of trades are pretty inconspicuous. And there's no real reason to unwind them right now. Okay, that's what we're seeing there. And some outright calls also bought May and June in the far out of the money, 3,900 calls getting bought in case there was a positive decision and there was like a reason for Ethereum to rip higher. But from what we're seeing, Ethereum is drifting back below 3,000. So it looks like, a lot of this upside optimism, not that there's that much of it, but it kind of seems to be a bit premature. All right, now, looking at relative value, in general, Ethereum vol is holding up a little bit better, but it has been realizing. So 10-day realized only 4 vols over for Ethereum now. The 30 days doing better at about 12. Now, the curve did get as high as 10 vols in the front earlier in the week, but it has drifted back down. So you can see on the week, it is fairly flat. That front end spread trading at around 6, back end trading at around 5. We do still like this back end. We think this back end is where the value is. We think anywhere in that kind of 60-day to 180-day region, owning this spread at 5 vols gives you plenty of asymmetric upside if Ethereum does decide to come alive
and we think it definitely could come alive if people start thinking that the approval is actually imminent, and then you'll get this large uplift in prices and probably in vol as well. So that's what we're seeing in the relative value. And then closing it out with skew. Skew's been a bit all over the place recently. We saw a big spike in put skew last week on the breakdown. Obviously, Ethereum really leading the way, over 10 vols in the front. But even a decent put skew in the 3-month bucket in Ethereum. Then it all got faded on the recovery as we bounced back above those key levels. And Bitcoin went into call skew again, even in the front end. But now we've seen in the latest sort of slide lower back down to 61k as we are right here, right now. We've got Bitcoin front end in a small put premium, Ethereum in a greater put premium, but nothing near the spike levels we saw when we were breaking down. And then looking further out, we're seeing still call premium in Bitcoin and a bit more neutral in Ethereum. And that kind of propagates across the curve where you've got about a 2-3 vol call premium in the far end of the curve still in both assets. Actually, Ethereum is probably a bit shallower and Bitcoin still holding a higher call premium in the far end. All right, that's what I'm seeing in crypto vols this week.
All right, so that's my quick and dirty update on vol in crypto. Remember, like and subscribe this video so that you get these updates every single week when they come out. So, Dave, what do you reckon? ETH vol is quite firm, as you were kind of alluding to. People seem to be willing to pay a little bit for that.
Yeah, and I think that can continue. The spread to certainly further out the curve, the spread to Bitcoin still looks probably,
still 5 vols is cheap, I think.
Yeah, so
yeah,
still probably want to keep owning that spread. Looks interesting. I think the rest of it, like, and this isn't your update so much as the market, it's kind of feels a little bit kind of deflating in some ways, in that it's quite a lethargic market.
The sun's out, mate.
Yeah.
I mean, I'm not even joking. Like, I've traded options for 20 years, and when it's sunny outside and there's no obvious catalyst to trade, you want to get out of the office and go, right? You don't want to sit there trading 24 hours a day. So the markets do become very sleepy and very lethargic because there's just not that much to do right now.
Yeah, so you probably, again, you know, all the vol traders love to be sort of selling vol. Probably going to work for now, I think. Certainly in the front end, just sort of keep short that and keep using that to buy and own sort of longer dates.
I just think that the way the curve has shifted down in quite a parallel fashion.
Yeah.
Especially ETH. I mean, it does somewhat surprise me that with the SEC punting the dates out to July, that you haven't got a steeper curve between May and July. You've pretty much got a flat curve at around 60 vol. So maybe that's because Realize has kind of been hanging in there. But if we have another week of just chilling out and not doing that much, realizing 40 or something, then I think that front end is susceptible to a 10 vol point drop. But I don't see July doing that, given that we've got those dates out there in July now. You know?
Yeah, so maybe that's still got more to move, and then
so I think the calendar trade makes sense.
Yeah,
and because it's like the thing that people are going to be wanting to own in July is calls, you're probably better off doing call calendars, right? Because July calls are going to maintain a bid for the event risk that we might get an approval, we get an explosion higher. So you want to own July calls, and then you want to sell maybe some May calls, because if market melts down in the meantime for whatever reason, you just run away from the positions and they don't sting you too badly.
Yeah.
But it's fairly unlikely that we're going to rip through the upside by end of May on no actual catalyst when the decisions aren't till July. So that would be the way to structure it.
Yeah, interesting. Also, is there anything around the 15th of May for Bitcoin at all? I ask because that's the deadline, I think, for the filings on the ETFs to see who owns it. So we're having it kind of drip out in terms of who are the holders. Mm-hmm. There's been no like big oh wow they're holding it. There's been a few good things, but
I don't think that in itself is a big enough macro driver that's going to move Bitcoin because remember, Bitcoin front end vols at around 50, right? Yeah. So a break even move is 2.5-3%, right? So is that piece of news going to give you excess volatility above the day-to-day 2 or 3% move in Bitcoin? Probably not. So for there to be like an event premium, it needs to be an event that's going to drive a 5 or 10% type gap, right, in short order for the market to materially price that as an event and for you to see it on the curve.
Yeah.
You know.
Yeah, interesting. Yeah, so I think for now, I still think we're probably going to be sort of treading this 65k range for a little bit. But again, like it's you need to be on your toes, because I think we start to break those 67k levels, then all of a sudden, we could have quite a sharp move back towards 70k. Hard to kind of trade that. But again, I think if you're short like the 1 week type stuff, short the 1 week vols, and then you're owning some 1 month or what have you, then I think you should probably be all right.
Yeah, I mean, now that vols have reset a bit lower already, I mean, I think you either do calendar trades to earn a bit of premium off the front end and the curve going into contango,
Yeah.
or if you don't want to mess about with calendars and you just want to sell premium, you got to probably do it in contained ways like iron condor type structures that just, what your fixed losses are. And, if the market literally goes sideways like it is now and stays in, like you said, stays in the 65k range,
Yeah.
then you collect your money. But if it breaks out, you're covered on those wings and you don't just get buried, basically,
Yeah.
right? So,
and I think as well, like we spoke before, the one thing that I was nervous about was if Powell did start talking about hikes, and he's kind of killed that. So I do think, like, I do think there's kind of limited downside. I think we've probably flushed a lot of leverage already. So it's hard for me to see what, everyone had that 52k level for some reason in mind, and in your update, it looked like people monetized those hedges pretty well. So it's hard to see what
that was a big technical level around 52k, I think.
Yeah. It reminded me actually of when when we like post the ETF and we traded sub 40, and then everyone started talking about 32, 30, and I think we got to around 37 or so, and then bounce, and obviously the rest is history from there. It felt a similar kind of move.
But this one came with a bit of a macro narrative shift, right?
Yeah.
Because reason people were getting bearish was because they're worried that the Fed was going to go higher for longer and open the door to hikes and that whole hike distribution. But they said, no, not happening, right? So that does hopefully put a floor in now.
Yeah.
That, it's going to be hard to get any lower than what we saw at 56k when everyone was worried about that scenario.
Yeah.
If he's kind of taken that scenario off the table, right? You'd have to see much hotter incremental inflation data for many months to bring that scenario back.
Yeah.
So we probably have this period over the summer where it's going to be hard for the data to change that narrative. So for the bulls, it's like a good summer probably, right?
Yeah, no, absolutely. So what's your probably to wrap things up? What's your
Trade of the week?
go-to trade? Yeah, right.
Yeah, I think calendars. I think call calendars on Ethereum just because the curve looks flatter there. And also because it looks like we're going to be in a bit of a low realized vol type regime. Obviously, you've got CPI data next week, so that could throw a little bit of a spanner in the works. But the way the inflation data has kind of been coming, I don't think that's going to be a massive outsized move to the upside. So, Ethereum, given that Ethereum hasn't had much of a rally yet and has been underperforming, I think leaning into Ethereum call calendars, something along the lines of end of May versus end of July would work. Or if you wanted it for a bit of a longer dated strategic sort of position, maybe June versus September. But either of those sort of call calendars take advantage of the flat term structure, get you long a bit of delta, and you're not paying decay in the meantime. So I think they tick a lot of boxes for me for a structure that kind of gets you into that bullish position and has a lot of moving parts that are going for you.
Sounds good.
Cool. Anyway, we'll call it a day for this week. Thanks for watching, everyone. Remember, like and subscribe. We'll catch you all next Tuesday.